Our next guest is Director of Asset Allocation and Portfolio Manager at Fidelity. Trevor Greetham manages about $11 billion in assets. Thank you so much for coming in. Trevor, nervous, I guess. Nervousness is set to be on the market's volatility. How does it make your job that much more difficult? Are you more prudent now than you were just 2-3 months ago?
Yes, we have reduced our exposure to equities and commodities in the early part of the summer. I think we were talking about that last time we were on your programme. The volatility does make things quite difficult, and it does bring to mind the period in 2007-8 when there were lots of big up days, but then the market sort of drifted lower again. Yeah. And I think, again, we're looking for very clear policy leadership, particularly in Europe. Which
we're not getting at all, Trevor. I remember, you know, we spoke a couple of months ago and we said, oh, it's going to be a volatile summer, but then it'll get a little bit better by September. But as things are, it seems, you know, things are worse than ever because we really don't even know if Greece is getting its money.
Yes, and the critical thing really is what's happening to interbank funding. And we need interbank funding spreads to come down in order to reduce the risk of a credit crunch in Europe. And it's possible we'll see something from the ECB. I wouldn't be surprised if they start doing longer-term repo operations to try and get the interbank spreads lower. If they succeed in that, then things will pick up for a while, and we've got the Fed this week as well. So there are some positives that could happen, and people are very gloomy. But the basic message at the moment is that the world seems to be slowing down.
Now, banks are really getting a hammering in today's trading session. If we look at Société Générale, a lot of the French banks, but also a lot of the peripheral countries, the banks there are severely under pressure. Certainly, the ECB can't do this job alone. Would you be buying any of the stocks, or absolutely not? Because actually, you have no idea of if we're seeing a default or if we're going to see a Lehman-type operation.
I think it's very difficult at the moment. I mean, what we really need is the EFSF to be in operation. We need it to be buying up the peripheral debt. We need a recapitalization of some banks because they can't afford the markdown that might require. And then we need the ECB to draw a very clear line before Spain and Italy, and it needs the political support in terms of, you know, an idea of where Europe is heading. Is it a fiscal union, or is it a union where defaults are allowed before it can really do that? And I think all of these things can be done. It's a matter of political will. And sometimes what we're seeing today, this sort of market pressure, is what brings about political will.
But are you not concerned that actually we're going to be limping along with this kind of state of limbo because the politicians don't want to take the tough actions or even the right actions in certain ways, and therefore we're going to be left with markets in limbo? I mean, it could happen for what, the next 6, 7 months, 9 months, unless something happens either way.
It's hard to know. I mean, the thing to remember is this European crisis keeps sort of coming and going. It's sort of rumbling along in the background. At the moment, it's in a sort of acute phase. But if we were to see a pickup in global growth for a while, off the back of, for example, action in the US or from China, or I don't know what, I can't see it at the moment. But then things would ease off again.
Now, we're just seeing some live pictures there of the Greek finance minister. He's meeting in an open discussion his IMF officials, trying to discuss this, again, next tranche of money. Is this the resolution that we need? I know we talk about the Fed, but what is going to be the trigger that we actually understand the situation more clearly, so that we can have a correction on the stock markets, or we can have a nice rally because we're out of the European troubles?
Well, it is, again, very difficult to work out the exact timing of this. I mean, Greece doesn't need to default for a few months. But if Greece were to have defaulted and it was dealt with in a way through the EFSF and bank recapitalization in a way that restored confidence, then I think you'd get a lot more clarity, and the markets would give a bit of a boost to that. But I think what's really interesting is how the Fed will decide to view this week, because if I were them, I would be pretty nervous about firing all of my bullets when it's clearly a European problem.
Yeah, Trevor, I'd be nervous too.
So we might get disappointment from them this week as well. We'll see.
Trevor, thank you so much. Trevor Greetham there.